Welcome back to Morning Markets on Tuesday the 5th of October. Turning first for a summary of equity market performance yesterday in sterling terms. In the UK, the FTSE 100 was down 23 basis points. In the US, the S&P 500 down 1.3%. Nasdaq down 2.14%. In Europe was down around 0.9%. And in Asia, Asian markets were off around 0.8%. Japan down around 1%. We'll explain a little bit for why that was the case. In terms of bond markets, in terms of UK 10-year gilts, they were in at 1.01%, so up 0.8 of a basis point. In terms of the US 10-year Treasury yields, were at 1.47, so up 1.7 basis points. In terms of currency markets, the dollar was slightly weaker on the day. It was down around 0.2%. Sterling against the dollar was stronger at 1.36 and against the euro at 1.17. In terms of commodity markets, oil, so measured by Brent crude, in this case was in at $81.27 per barrel, so up 2%, and gold was up 0.5%. The most powerful factor at play yesterday were inflationary expectations, challenges of rising energy costs and supply bottlenecks. These factors, along with the improvement in labour data, as we noted yesterday, are increasing the expectation of market participants that interest rate hikes may occur sooner than currently guided by central banks such as the Federal Reserve in the US. US Treasury yields across the curve continue to grind higher yesterday, up around 1.5 basis points across the curve on the day. Yields on 10-year Treasuries have been increasing from around 1.3% towards the end of September to 1.48% at this point in time. The rise in yields spilt over into equity markets, creating a headwind for technology stocks as a rise in rates would lead to higher financing costs, which could potentially challenge the earnings, assuming that this rise is not offset by stronger revenues. This was more greatly felt in the US, where the technology sector makes up around 20%, or 28% I should say, of the index, measured there by the S&P 500. To get a more concentrated view, we can turn to the Nasdaq Composite, which was down 2.14% on the day. European indices were challenged by similar dynamics, though technology is a smaller allocation of the index at 16%. The index did receive some support from energy companies, which benefited from the 2% increase in the oil price. Despite a stronger pound, the FTSE 100 was the better performing index, given the support from energy companies, which is around 10% of the index, namely Royal Dutch Shell and BP, which were up 1.5% and 2% respectively. Oil prices yesterday reached their highest level in 7 years after OPEC Plus refused to increase their quota of oil production. Back in July, they agreed to increase production output by 400,000 barrels per month each month until at least the end of April 2022. Despite challenge from the US, Europe and China to increase supply to help moderate prices and the headwinds towards economic development, they did not agree to adjust that limit. Across in Asia, we felt some turbulence as the Chinese property saga runs on. We've discussed the situation with Evergrande. Overnight, the focus was on a smaller developer, Fantasia Holdings, who failed to meet payment on a $206 million bond maturity. Flags were raised last week by rating provider S&P, who downgraded the credit rating to CCC in relation to Monday's bond payment. We continue to remain vigilant in this area of the market. On the economic data front, in the US, we had the release of new orders for US manufactured goods for August. The reading demonstrated a 1.2% month-on-month increase, coming in ahead of expectations and coming in ahead of the previous month's change. The reading for July was up 0.7%. The biggest areas of demand being transportation equipment, including non-defence aircraft parts. As we look at markets on open this morning, it's good to see some green on the board across the UK and Europe in both equity and bond markets. We look forward to bringing you up to date tomorrow here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.